Thank you. Thank you very much. Guys, a little bit about myself. As I said, I've been a trader for over 30 years. I started back in the business in 1981. That sounds ancient, but when you stop and think about it, it's what has taken place over that period of time since I started trading has just been phenomenal. Back in those days, we had a hotline that for institutional grain trading that I did that we listened to that went directly to an order desk. And you can imagine sound too loud with echo. Let me hold on here. If I can ramp that back a little bit. How's out? Oh, that's okay. Better sound now. Okay, good deal. Okay. And what we did at the time, we would call orders in to a trading desk in Chicago, because the main thing that I did in institutional grain trading was I traded long and short I may trade long for one client, short for another, but the premise was to try to enter the market at correct times to alleviate risk from their portfolios. And their portfolio may be it may have been a farmer that had 1 million bushels of grain, huge farmers. It could have been a big institutional firm that would have been dealing with the necessity to be able to purchase grains at cheap prices, and the importance of what they were doing was to similar to what a lot of people have heard about Southwest Airlines, what they did in the crude oil market years ago when they pre-purchased and hedged their fuel needs for years and years out. And by doing that, it made them a profitable airline when everybody else was losing money. So how did I get started in the business? This business came to me in a kind of an unusual way. I was in the agricultural business. Actually, it started out, and I was working in research and development with a company that produced and manufactured electronic grain instrumentation. What's that mean? Well, if you stepped into a John Deere combine or a John Deere tractor today, you would see instrument panel that looked like an airplane. In those days, that's what we first started doing, and I worked for them for a number of years, and had a pretty good communications with a lot of farm people all throughout the southeast United States. I'm in Tennessee, and by doing that, I'm in the middle of a lot of farm country. And when I got started, I did this, and I had a really good friend of mine that got into he came from I think it was Ohio, and he was institutional grain trader with a large grain firm, and he had just moved to Memphis, and he was running a brokerage firm here in Memphis. And he called me up and he said, "Hey, I want you to come in and spend the day with me. I want to show you what all that we're doing." And he said, I know you know the business, but he said, "I want to show you what you're doing." Well, that was 30-something years ago, and as he introduced me to it, and I started looking at it and saw that I could operate out of my hometown, that I didn't have to travel, that made a big difference. So I decided that I was going to give it a shot, and I've been trading ever since. I had traded before, but so that I knew somewhat what I was doing. But when it got into the institutional side of it and the people that I was dealing with and the amounts of grain that we were trading, I got to meet some really interesting people along the way. One of the first soybean trades done with the Soviet Union was done by a friend of mine sitting at a table in Memphis, Tennessee, and wrote up a contract on a napkin, and it was Old Cook Industries. and that was the first time that they had sold grain to the Soviet Union and soybeans. There used to be another in a firm that I was working at. I don't know, have any of you guys ever heard of a guy named John Henry? John Henry was, I don't know if y'all heard of him or not, but a little bit about John Henry. Some yes. Right now, John Henry is I think he's the sole owner of the Boston Red Sox. And I think there's a soccer team that he owns. But I knew John Henry when he was living over in Arkansas after his father passed away, and he inherited a farm. And this farm he inherited, he decided he moved from California. He was a hippie, if you've ever seen one. He would drive over from Arkansas in his yellow Volkswagen Beetle, and he would come over and get closing prices. He would look at news. He'd talk to us as traders. A lot of the times he would just come over there and spend the afternoon trying to get as much information he could about what he was planning. Well, John Henry at that time was a farmer. And no, he was not an original turtle trader. John was, he went out on his own. He started, actually, he got started in the business by managing his own portfolio of grains. He did very well at it, and he became the largest, at one time, he's scaled back off of all of this, but at one time he was the largest money manager for commodity futures in the world, as I understand it. At least that's what I've read, that he's been the largest. And so what, he was a technical trader. I started talking with him and talking with other people, and at the time when I started at the business, we didn't have the privilege of learning the way that you guys do today. It was a pretty long learning curve, and you had to find somebody that was willing to sit down next to you and show you the nuances of the business and teach you how to trade in a way that hopefully would be profitable for the people that you were dealing with. Well, John Henry did that to a degree that ended up, I learned from him to a degree because I knew he was a technical trader. But the most I learned from were the old traders who'd been around when I started in the business. Some of them had been around for 15, 20 years. Some even one guy even longer than that. I think he was around when they invented dirt. And so what happened, you sit by these guys, you learn from them, you pick up on things that they're doing, and that's where the holiday trade came along. I stayed in that business for a number of years, and then I decided, like a lot of you guys, that I wanted to go out and trade for myself and turn my business around from where I was trading for other people, and go to start trading for myself full time. And when I did that, a lot of you guys out there I know want to do it. You go out and begin trading completely, and that's your profession. Well, when I did that, things seemed to change. When I was trading with, had quite a large portfolio that I was trading, but when it was all just trading for myself, things changed a little bit, because before I was earning commission off of it, and some of you guys now, I hear you talk about commissions that you're paying, that they're too much. Well, when I first started in the business, it was almost like a regulated business, and people paid $80 a round turn for trading commodities. And of course they would negotiate that down, but a good commission rate for them then would be $50 or so. But it wasn't unusual to have somebody that pay $80 a round turn for a trade. But when I stopped making my income and started trading on my own, things changed a little bit. I knew before I'd get paid at the end of the month. When I started trading for myself, there was a big question mark there. It was all dependent on what I was going to be doing and how good I was going to be trading. And that's been over 20 something years ago. And I've been trading ever since. I've got 3 kids. My last one coming up, some of you guys, I don't know if y'all are basketball fans. My son played basketball at University of Memphis for 2 years and transferred out to a little college out in the Northwest called Gonzaga. He played basketball for them for the last 2 years and had the opportunity to play on a team that was play quite a bit on a team that was #1 in the country. And a lot of the things that we see in sports, I'm very active. I have a daughter that one of my daughters played college basketball, and through all of that, we had a very sports-minded family, and that comes across also in trading. I'm not going to say that I'm very aggressive, but I don't sit around and just twiddle my thumbs most of the time. I'll put on a trade. And that brings us to this. When you start trading futures and options, to make sure that you guys know what you're doing. Don't trade with money you can't afford to lose. And basically this, with what our website is, TradeTheSystem.com, and this is for training and educational information. Most of y'all know it, and I mentioned to you about the what I learned from other people. How many of you guys have ever heard of this legend called Voice from the Tomb? This is what one of the people, one of the old guys that I sat next to for several years, and this was something at the time he just subscribed to. Yes, it was when these dates came up, he was there. Now, for you guys who don't know what Voice from the Tomb is, it's a legend of a grain trader in Chicago that made his fortune trading seasonals. And what is seasonals? It's when you can, it's pretty easy to figure out the different seasons that we've got when it comes to the agricultural market in the grains. It's you've got planting season, you've got a growing season, you've got harvest, and then you've got a dead time. Now, this guy in Chicago made his millions trading corn and wheat. His wife died, he had children, and the children thought that with the fortune that he had just amassed, that when he passed away, the children were going to inherit all the money. Only problem was the kids were lazy, and with lazy kids, this guy, it kind of rubbed him the wrong way, so he said, I'll fix this. In his will, he left it this way. He gave all his money to charity, and what he left his kids was one thing: the dates of when to buy and when to sell wheat and corn. And after giving all his money to charity, he left his kids these dates and said if they would follow his advice, that it wouldn't be long before they had fortunes of their own that they would have earned on their own instead of just dropping it into his lap. How true it is, I don't know, but this article that I found was from, I think, a paper was in a Chicago paper from the 1940s, where I looked it up and I found this. And at that point, they said it was probably 30 or 40 years old. So, one of the questions, is it still a viable trade setup from the dates that the grain trader, the Voice from the Tomb, gave? What's changed over the years? And you can imagine from the early 1900s when supposedly this man was trading from now, what has changed in the market. Just massive changes in the last 10 years. Now, what's a driving force behind the dates for these trades? How many of you guys have seen the movie Trading Places? Remember, if you watched it, Dan Aykroyd was a rich kid who was working for this brokerage firm, and they decided that they were going to do an experiment and get a guy off the street who happened to be Eddie Murphy. It's a hilarious movie. What'd they do? They were waiting for the big report. What was a big report? Anybody remember that one? Yeah, Duke and Duke. Yeah, orange juice. They were waiting for frozen orange juice. They were waiting for what? They were waiting for a crop report. Now, what does that have to do with the holiday trade? I'll show you how it all links in just a little while. Now, you have crop reports. If you're going to trade in the grain markets, if you're going to trade in the agricultural markets, if you're going to trade in any market, you need to know when major reports are going to be released. You need to know when crop reports are going to be released for the grains. You need to know when energy reports are going to be released if you're trading crude oil. And you especially need to know when the Federal Open Market Committee, FOMC, meeting releases the change in interest rates. Then when they release the minutes, you need to know all of these. You need to know when these major employment dates are going to be released in the morning. Now, what's the difference between now and years ago? The big difference is the time that they are released. And I'll show you that on our next slide. Now, is this information necessary for you to be able to trade and use the holiday trade? No, it's not necessary to know what the report is producing. Now, if you're a strict fundamental trader, you may want to really work on this and see if you can't come up with a conclusion for yourself of what these reports are going to say. They will have pre-release estimates like almost every report does. But what is in the report is not really necessary for me. I'm a technical trader. I have been from the very beginning. One of the guys that was a mentor to me was very strong Elliott wave trader. I've got the book the Major Works of R.N. Elliott, and that was the first book that the guy threw it down in front of me, and he said, "You need to read this." That's where I got hooked on it, and I've been not so much as an Elliott wave trader, but strongly follow Fibonacci price retracements and things of that nature. Very technically oriented. Everything I do is very technical oriented. The fundamentals, I know what they are. I know, do I make trading decisions off of them? Maybe a little bit, only if it's 120 degrees in the shade and it hadn't rained for a month. You have to be somewhat fundamental if you're trading the grain markets, because you know that if it's like that, the market's going to be a little bit bullish. Now, what effect do crop reports have on the markets? Huge effects. And why is it necessary? Why does a energy report that is concentrating on what our supplies of crude oil is, what our usage is, what's our drawdown from in crude stocks, things of that nature? They have a huge impact in the market. Now, monthly crop reports, where do you get them? And let me see if I can pull, I may be able to pull it up here. No, I'm not going to do it. It just may mess things up really a lot. I was going to pull it up on the internet and show you where you go to get these. But you can Google it and you can find the crop reports and the dates. But the important thing is to know when they come out. Why? That will be, you'll see that in just a moment. The acreage reports, the major crop reports that come out in the agricultural industry, come out now at 12 Eastern, 11 Central. It used to be they would come out at 7:30 in the morning. The markets were closed. People had time to read it, digest it, and make decisions about these reports. Now they come out, you've got reports that come out like you can see right here, a crop progress report. And off of this crop progress report, it comes out once a week. The major reports come out around the 10th to the 12th of the month, once a month. And it's world supply and demand, things of that nature. Now, why is that important? It's important for this reason. In June of this year, when we had been in a really strong bull market in soybeans, the June 30th crop report came out. Now, from the high on that day of that crop report, we had a 74-cent move from the high. If you trade the E-mini S&P, that's like a 74-point move in the E-mini S&P. The grain markets are priced exactly like the E-mini S&P. Each tick is worth $12.50. So you can imagine a 74-cent move from high to low in one day is a pretty massive move. Now, did you have to trade this knowing what was in the report? No. If you're watching it on a technical basis, I will trade. A long-term trade for me in most cases would be, and I mean a real long-term trade, is about maybe 3 days. The average trade for me is probably 10, 15 minutes. I'm in the market, I'm in and out, and I'm gone. I very rarely now carry positions overnight. And the reason, over 30 years of trading, I've been through times when there's been reports. I've been through 9/11. I've been through all types of skirmishes from foreign countries that move the market around, through weather problems. And you know what? It's nice going to bed at night and you're flat in the market and you wake up the next morning and you get to start all over again from zero. Instead of waking up in the morning or waking up at, say, 2 o'clock in the morning to check positions because you know the foreign market started and you need to check and make sure to see what your trade is doing. Even though you have stops, you want to know, is this an area that maybe I need to move my stops in tighter, whatever. So most of my trades are very short term, and that's why I love volatility. Why? Market volatility around a report is a great, for me, I love trading it. You can see here, out of this crop report that came out in June, no, this particular one was in March. In 4 days in the soybean market, it had a $4,725 move. Now, how do you trade these moves? Technically based, and that's, I'll be talking about that later on as we get into the closer to the end of the slide presentation here, and we'll go up and show you some live charts and different things that I've been working on. How do you trade these moves? A lot of people would think, man, there's no way I can catch up and do this. Yes, you can. But you've got to be very, you have to be very disciplined in everything that you do. You've got to use stops in the market. How many of you guys have read the book Trading Wizards? Those series of books. When they came out, you know, one of the things that just stands out in all of them, when I read through any type of trading book, what I'm looking for is how they manage money, not how they traded so much. You can take the worst system and have excellent money management and more than likely do fairly well in the market. But if you've got the best trading system in the world, whatever you've designed, in poor money management, you know, you're going to wipe yourself. Well, you're going to wipe out an account. If you have poor money management or no money management, no system set in place, you might as well just write me a check and send it to me, and I'll call you every day and we can talk about trading. because eventually good traders are going to end up taking your money. So this is one thing that I would think that I would drive this point home. When you're trading in any type of volatility market, and everything is volatile to some degree, it all depends on how you measure it. You've got to have a business plan. You've got to know what you're doing. You've got to know how you're doing it. And you've got to have a process that you can repeat it over and over again. You know, I'm a private pilot. I had a guy that taught me to fly that was a 30-year pilot for Federal Express, a little company here in Memphis. And what he did, he put me in every situation that he could think of that I could handle to a degree without just throwing up all over everything. And the reason, he was a aerobatics pilot also. He was an instrument, he had instrument ratings in every type of airplane that I think you could have, or instructor ratings. And he taught me to fly, and he would put me in places that he could get out of, but he would test me. But there was always, you know, he always taught me, fly the airplane. And that's what you do when you're trading. When you're trading and you've got things that are a lot of volatility, you stick to your system. Now, he would also taught me a lot of things about pre-flight checklist and things of that nature. And I would say the same thing for you guys. If you're going to trade in any type of market, make sure, and I did this a long time ago, and I've taught people and people that I've done mentorships with, I've told them, get you some index cards and write what you're going to do. And I've still got mine sitting in front of me today. Pre-market, do I look at it every day? No, I know what I'm doing. I've been doing it for 30-something years, and I know what I'm going to be looking at. But I've got how many index cards is this? About 7 index cards. And I've got trade setups on it. I've got what I do pre-market, what I do post-market. I've got the trade setups. I've got the way that I'm going to manage money. And I also have my objective for every day. Now, if you guys, I know that want to trade for a living, what is your objective every day when you sit down in front of a computer screen? What's your objective? One of the things that I tell people is to do this. Concentrate on this. You may have a $5,000 account. You may have a $50,000 account. You may have a $500,000 account. No matter what size account you're trading, let me pass 30 years of wisdom on to you about one thing. Work extremely hard on making $50 a day. Now, you may think, that's crazy. Why would I do that? If you can't make $50 a day consistently, that's 4 ticks in the grain markets, 4 ticks in the E-mini S&P, in the E-mini Dow, that's 10 ticks on one contract. If you can't make $50 a day, what makes you think that you can earn a living out of the market? What makes you think that you can catch a $4,000 move in soybeans if you can't get the first $50 or the first 4 ticks? I'm very adamant about that when I teach people that. Spend your time seeing how proficient you can be with your entries in the market. And that's what you do. If you concentrate on the first 4 ticks of the market, you can do what? Then you've got an opportunity to get the next 4 ticks out of it, and the next 4 ticks, and the next 4. But if your entry is at a point where it's not very well thought out, and you just jump in the market, and you keep getting stopped out, and you can't make $50 a day, then you need to recoup and try something different. And I also tell people this. Use indicators, any type of indicators, whether it's an indicator that you purchased or an indicator that's free on whatever trade system that you're using, whatever type of your platform that you're using. They're employees. These employees need to be working for you. And as you have these employees, make sure that they're working. If you've got an employee that's not working, maybe you need to reposition that employee to another job. Or if it doesn't work at all in another market, you need to reposition that employee, which is a trade indicator, with a delete key. You don't need to keep following it. You don't need to keep trying to make it work if you can't make it work for you. And the reason I say that is this. Back when I first started trading, we had price data that we had to follow and pretty much build charts in our head. I learned to read tape when the only thing that we had was a Quotron screen that would flash the open, high, low, close continually all throughout the day. And you were watching price changes as it went along. You would look to see if soybeans moved from, say, $5 to 501 to 501 and a quarter, back to $5, 501, and you would watch the progression of that movement. At the end of the day, then we would get charts, and we had to fill in our charts what the open, high, low, close was, and then do technical analysis off of it, like figuring your own moving averages. To many of you, that would be so foreign today, because you can plug in a couple of numbers. But back in those days, we didn't have as many markets as we have today. But I would sit there and do it, and I would still finish my trading day back at 1:15 when the markets would close, and people would go, when I was in my young 20s, go, why are you finished? Aren't you working? Yep, but I'm already finished for the day. I would have all my work completed, and I would know what I was going to plan on doing for the next day, and we'd keep going, and then we'd go play racquetball or golf or some other sport, which I was pretty heavily involved in. So what do? Why do you do all this stuff? How do you trade these types of markets? You have to have a plan. Now, back in July of this year, did any of you guys catch this move? There was a move in soybeans between 12.36 and 11.35. I've been telling people, heads up, we've got a move coming. And what happened? On July the 3rd, if you went back and looked at the crop reports, you would see that there was a crop report that day. The day before the 4th, which was on a Friday, this was on a Thursday, and the market dropped over $1 in soybeans. And I'm mentioning soybeans because these are some of the bigger volatility moves. I trade corn a lot. I've traded a lot of contracts over the years, thousands of contracts, and what we've done is I've tried to pass along things that I've learned over 30 years of trading to the guys I'm teaching. Now, how big of a move is this? This is over a $5,000 move in one day, from 11.36 to 11.35. What's the limit on soybeans? The limit on soybeans is $1. So it can move $1 up or $1 down. It can make a really big move. Now, this was, I said this was the 4th. This was a move that it took from the high to the low, and the low that I put in here was a couple of more days. So this was 3 trading days, this $5,000 move. So November soybeans on the 25th closed at $10.83.5. $14,000 move from late May to the end of July. $14,000 move. Look how that market trended. If you've ever traded the grain markets, they have a tendency to trend very well. Now, what is that trend? How does that trend work? A lot of times there's going to be some pretty good volatility to it, but what you get different growing seasons. And off of those growing seasons, you get a lot of change and a lot of volatility because of the different things that are going on throughout these seasons. That's why they're called seasonals. Now, how do you trade it? You trade it, I think it's very technical. Like I say, if you want to trade it, you look for moving average changes. You look for higher highs and lower lows. You can look for, you can set up any type trading process, but make sure your process is well founded and it sticks to it. A lot of these trades take place in times that seem to be very cyclical. Back when I first started trading, I was introduced to somebody introduced to a trading method. It was called how commodity cycles. And it was how the markets, whether it's just ag markets or whether it's financials or the equity markets, how they went through certain cycles. You know, you may be thinking, well, I don't trade soybeans. Well, this is not a grain-only type situation. This is not a grain-only type move. When you start looking at times of the years with different cycles we go through, whether it's equities, whether you're trading ETFs, whether you're trading options, I trade all of those in a way that will help people make money. Now, what happened the other day? This was, I'm thinking it was last Thursday. We had a move when we had no, it was the 12th. When was the 12th? Just a couple of days ago. We had a crop report. In 1 minute, again, I use soybeans, we had a move of $1,000. Why? There was a crop report on the 12th. A 20-cent move in soybeans. Now, out of that move on a per contract basis, I was able to go in there. Did I take all of that? No, I don't try to. But I did. I traded. My trading day consisted of actual being in the market about 30 seconds. And out of each contract I traded, I profited a little bit over $312 a contract. So you put some numbers behind that, and in a 20-second period of time, that's pretty decent money for a day's wage. Now, what brought about a lot of this change? Before and after on soybeans, August the 12th, 2014. You can see prior to 11 o'clock Central, you can see what the volume was. At 11 o'clock, you can see what happened. That's why it's important to know when these reports come out. Cost to catch that, how much? I went in with an 8-tick stop in the market, like I always do. I risk $100. And as soon as I start hitting my first targets, I move my stops up to where I'm at a break even, or what I call a free trade, and then let it run. On this particular case, the volatility, we got volatility. That's what I was looking for. 12,000 contracts per minute that traded over that 1 minute after the crop report came out. That's why you don't have the privilege that you can get the report, read the report, and then see what happens. You've got to be able to trade it as it comes out. Same thing with the FOMC report. If you're trading the financials in the financials or the equity markets, if you're trading bonds, a 30-year bond, or if you're trading the ES and the YM. Over the years, I've traded just about everything. Now, off of these moves, off of these crop reports, how do you trade them? One thing that happens an awful lot, if you've ever seen anybody jump off a bridge with a bungee tethered to a bungee cord, you'll know what I'm talking about. Now, take a look at that price movement and see what happens. That price movement, when it came out, whether it's up or down, a lot of times it will move to extremes in one direction or the other. It doesn't take a real nice, smooth little run where it just ticks a quarter of a tick and just begins to move. Usually it's going to be an extreme, violent move. Is it pretty violent if you jumped off a bridge with a bungee cord tethered to you? Yeah, it will. But when you hit bottom, what's the first thing that happens? You have an opposite type response. A lot of these times, you will see these markets come back to about a 50% move of that entire first cycle of the move. Does it always happen? No, but it's something that if you're observing in the market, you start looking at it, and when it gets to about a 50% move, you can see what happens. If you know how to read tape, if you know how to read the volume of the markets, that's where it comes along. Now, I'm going to be doing a webinar on the 21st of this month, and I'm going to be teaching a lot of this. I'm going to be teaching different ways to trade these and manage the money so that you can also take advantage of some of these moves. You may be thinking, well, I don't want to do that. Well, you get the same type scenario in the market almost every morning at the open. Tremendous volume, and then the market settles down. Can you take advantage of that volume move when there's a lot of people going on? You know, it's kind of like Black Friday, when you see people, and I love watching people, and I watch the methodologies of traders. And as I watch people, if it's in an airport, if it's in a sports stadium, whatever, they all move in herds almost. A lot of people have the same thing. Have you ever pulled up to something and there's a big line of cars? And you look at it and go, well, I have the choice of either doing this. I can either get at the back of the line, or is there a better way? Oftentimes there's a better way. People just have a tendency to fall in line and follow the leader. Trading is not so much like that. What you want to do is you want to be able to observe what's going on and then respond to it. Not react, because like in medicine, if you respond to something, that's very good. If you have a reaction to it, it's bad. I like to respond to what I'm seeing in the market and what people are doing. Now, over the years, like I mentioned, times have changed. And times have changed in the market also. A lot of times, you know, I was in the industry in the electronic instrumentation business with a company. It's called Dickey John Corporation. They made a planter monitor because the guy who invented this was a farmer who lost eyesight in one eye. And a farmer back in those days, he was running a tractor, and he would look behind himself to watch, make sure that everything on his planter was working well. This guy lost his eyesight. And because of that, he got innovative, and he made a little monitor, and every time a corn seed would drop through a planter chute, through the tube to go into the ground, it would make a light bleep. And when that light would flip on and off, what happened was the corn seed was triggering a little device in there that would flip down and spring load it and flip back up. Well, he came out with something really interesting, because then farmers would be able to know when their planters got clogged up with mud and they quit planting seeds, and they were just having a buildup in the tube, in the seed tube. Well, this got started. It got really big until he started doing something with large farmers, with large planters, which ultimately, when you look at the instrumentation in a tractor today, it's like I said, it's like flying an airplane. From that previous slide with a guy with a 2-row planter planting 100 acres, you've got tractors now that plant acres very quickly with setups like this, and it's got to be a lot of instrumentation to it. So if things in the agricultural industry and the farming industry, have things changed, so have the markets. What happened back before 2008, we did not have electronic trading. After 2008, we did. What happened? The majority of the volume shifted off of the floor of the Chicago Board of Trade and the Chicago MERT to what? A trading screen. After 2008, I'm not sure the picture on the right when that was, but it's even less than that now. It's kind of like a ghost town. It's the excitement that was on the floor of the exchange and the way people would migrate there. Those guys who were trading in the pits in Chicago, they had an advantage because they got information that we didn't get, which they were able to watch people. And as they watched people, they knew when some big trader came in the market. Somebody mentioned something about the turtle traders not long ago. The turtle traders, yep, they were out there. Rich Dennis was out there trading. He would step into the pit, and I'd had a guy who was running the trading desk for me. He would call me and say, "Hey, Dennis is in the pit. What's he doing? He right now he's buying. Is he buying big? Yeah, he's buying big. How many is he buying? He's buying 100 at the market. Okay, what's going on?" And he would inform me what's going on, what that trader was doing. Used to be a guy that'd step in the pit, and every now and then, all of a sudden, he'd show up, and there would be, "Hey, Iceman is here." A lot of them had nicknames. Well, that doesn't take place anymore because 90% of what's going on is on the floor of the exchange. 90% of what's going on is electronic trading. Now these guys have had to change modes, and one of their opportunities to trade and know what's going on against big traders in the market where they could step in front of them and make a profit. They would trade for 2 or 3, 4 ticks at a time, in and out, and do thousands of trades a day. Well, those guys have had to try to transition, and some of them have had a really hard time doing it from the floor to a screen where all they had was what we have today. That is your modern day pit, what you're looking at right now. What's the big difference? The chart here on the left that's got the volume to it, that's the difference. Prior to 2008, we did not know. You saw price movement, you saw open, high, low, close. You were able to track charts and have charts on a computer screen, and it would build charts, and that was great. But we were lacking one thing. We did not know what the volume was. You do now. The modern day pit is right there in your office. It's right there wherever you're trading. It's on your laptop. It's on your desktop. That's the modern day pit. And you've got to learn how to trade it. Now, there's a lot of different things that you need to learn if you're going to trade in the futures market. And some of the things that can potentially give you a little bit of a heads up going, okay, it seems to be a trend getting started here. And off of this trend, is it going to be something that may hold together? Very possible. And there's a few little things that you can use that will help you to understand what is going on, especially when it goes to some of the largest traders in the market who are money managers. And that's one of them is called a Commitment of Traders report. It comes out once a week. And what you need to know is not so much of the real, all the numbers of really what those numbers are. What you need to know is the change in these numbers. And you can get this at no cost to you from the Commodity Futures Trading, what is it, CFTC. It comes out once a week. If you Google it, Commitment of Traders report, you'll be able to get those reports. Now, what does it tell you? It tells you what managed money is doing. As you can see here, I've got it circled, managed money. It gives you long, short, and spreading. Forget the spreading and look at the long and the short side of the markets. You can see here off of this is soybeans again on June the 10th. The long in the market contracts had 150,000 contracts, a little over 150,000 contracts that they were long. The shorts had 70,000 contracts short in the market. Now, which one was decreasing and which one was increasing? The longs were decreasing. The shorts were increasing in the market. What does that tell you? If you went back and began to look at a chart on June the 10th, it may be that you would see that price was beginning to possibly reverse and go down because we had been in a very strong bull market. In July soybeans, were up around $15 when I started telling people, you need to start looking at options, you need to start looking at shorts, you need to start looking at spread trades because something is getting ready to break here. And what happened? It did. It broke very strong in July, July soybeans, July corn, and also the wheat. Now, as you look at these, you can see that those two changes that were made in those markets and how they began to fluctuate. And as they fluctuated, you can begin to pick up on this. Now, this is a chart on corn, manage money, and then over on the left side, it's where you can look and see what the actual producers and the merchants and the users of grain markets, whether it's grains, you can get the same thing for crude oil. You can get it basically a commitment of traders for almost everything. In the financials, you can look at it, the E-mini S&P, and you can begin to see how managed money, what they're doing in trading all of this. So the seasonalities that you look at, how they're based on trends in the market, the seasonalities that we've got, they've been one of the most accurate predictors of price movements over the years. The seasonalities, everything, you pretty much knew if you were a grain trader and you came in there and looked at these markets, you were looking at it in a way that if it was planting season and prices were high and the weather was nice and dry, you knew that prices were probably going to take a hit. During the growing season, if we were having a really dry June, you knew in July here, if it was a really hot period, the first part of July, that prices were probably going to spike to the upside. So what's happened in the market? We used to be able to trade off of all of those seasonalities, but now there's a new, it's not new, but the international market has changed things. The seasonalities have changed also because of the international scope of the futures market. Well, how have they changed? Some of the trends, some of the things. China, as most everybody knows, China's in the news an awful lot. What's happening? China's gone from a net exporter of grains to a net importer of grains. What does that mean for the market? That means that they're consuming grain at levels that they never have before. We've also got ethanol production that you look at, because ethanol is using up such a large majority of our crop that it's raised the price of grains to other countries who need grain to eat, while we're making moonshine out of it to run in our cars. And basically that's all ethanol is. And what do you have to have for it? One of the things here that we use in the United States is corn. So that has changed the demands in the market. The market is very global. The wheat market is also very strong in being that we've got Russia, big producers of grain. We were at a real demand-oriented market here up until about a month or so ago. And when we finished harvest in the South American crops, began to have we had planting here in the United States, and things were going great, and the growing season has been great. So what's happened? The price of the nearby contract in, say, soybeans has gone from $15 down to the $10 level now. Is there going to be more changes take place? Yeah. All it took was the other day, we made a really nice profit in the wheat market. Why? Putin helped us out with that when he put in sanctions that said, if you put sanctions against Russia, then Russia is going to place sanctions against the countries that do, namely the European community in there, the European countries that were siding off of these sanctions in the United States. Well, how does all that do? The old dates in here from the Voice of the Tomb, these are the dates that they had. Off of these dates, it was this, the legend has it that people would do it. I sat next to people who would actually trade these dates, and they made money. They would actually hedge people's crops based on these dates. Now, but things have changed, haven't they? How'd they change? A lot of it's changed. I call it the new voice from the tomb, or voice of the tomb. These dates have changed. You've got to be able to compile all this stuff together and know what's going on. And as you do this, what do you get? You get a lot of different volatilities. You get year-round trading in the grain markets, in the cattle market, in the energy markets that we used to be pretty seasonal. Now it moves all the time, which is great, because what I'm looking for is volatility in the market. Now, there is a good quote that I read: the trading and investing is like any other pursuit. The longer you stay at it, the more technique you acquire. And anybody who thinks he knows of a shortcut that will not involve sweat of the brow, sadly mistaken. This is years ago. What we've got now is a way that you can actually cut the learning curve because of the ability to have the educational process as it is right now as we speak. What is the holiday trade? How does it all work together? Why does it continue to work, and how do you identify making these trades? One of them is this. It's a very simplistic type thing, and it's, I call the three sisters. What is the three sisters? My wife has two sisters, and when you put those girls together, if one gets something, the other one gets something. If one of them likes a way that they've got their house decorated, the other two, it's like they follow suit. If we go out to eat and one of them goes to the restroom, what happens? The other two go to the restroom. I don't know what it is. Guys usually don't go to the restroom in packs. I know my wife and her sisters, my two daughters, they do. They seem to do everything together. Well, you know what? Sometimes the grain markets run in packs. Sometimes the ES and the Y and the YM, the E-mini S&P, the E-mini Dow, they run in packs too. Now, how do you deal with this? What you do is you look to see which one is rolling over, and I use a lot of different time frames that I'll be showing in the webinar that I'll be doing on the 21st, in different time frames that you can pick up. That there's times when corn may begin to move, and it makes a move, and soybeans haven't, and I've made some really good profits over the years of watching the volume in all three markets at the same time, or the ES and the YM, and watching the volume through that, reading the volume and reading the charts and the different time frames that I use, looking at some simple technical analysis, and then taking advantage of it and making some very good profitable trades out of it. As you can see here, the trends of these are together. Does it always act like that? No, sometimes you get one of them that kind of operates on its own. And that's when you've got to figure out what all that is. Now, on September the 6th, 2011, corn was trading at $7.55 or $7.59. We had a crop report that came out through this period in September, and in October, by October the 3rd, this market had been to a low of 572. It had in 20 trading days, corn had an $8,000 move, and you can see that it was, if you would have been able to get in close to the top somewhere, you could have held on and you would have never been threatened off of it along the way. Now, as we get into this, you've got to make a decision. Are you going to be a fundamental trader or a technical trader? Are you going to be a trend trader or a counter trend trader? Are you going to be a long-term trader or a short-term trader? Which ones, what are you? Just make a decision and stick with it. You can't be a fundamental and a technical trader and flip back and forth all the time going, okay, I'm going to be fundamental on Monday and Wednesday, and on Tuesday, Thursdays, and Fridays, I'm going to be a technical trader. Or I'm going to trade short-term this morning, and I'm going to trade long-term this afternoon. You can do it, but it's going to be very confusing for you. What are you good at? The market has a personality and a characteristic, just as people do. You've got to learn what the personality is of a market. You've got to learn what the characteristics are of that market. Some people drive to work every day the same way for years and years and never vary. That used to drive me crazy. I'd drive back when I was operating out of an office. I would drive a different way all the time. That's my nature. I'm looking for different ways to improve things all the time. Now, I don't know if a lot of you guys would enjoy this, but I wake up in the morning and take about 15 steps and I can be in my office. And it sure is nice. We homeschooled kids growing up when the kids were growing up for a reason. I had a lot of flexibility, and so did the kids. During the month of September, we'd head to the Gulf Coast, and we'd stay at the Gulf Coast for a month. I'd trade from down there because of the electronic trading off of my computer, and it was awfully nice when we were raising, and we could go down there. People were gone, the summer crowds were gone. We had a blast. But all along, there was a method to what I did. And what was that method? Regardless of what the analysis you use to make trading decisions, you still have to make decisions. You've got to be able to do that. So the best way to do it is document for yourself what type of trader you want to be. You've got to answer a question. You've got to ask a question before you can answer it, right? Yes, you do. And what we want to do is go over in our holiday trades is help you know what questions that you need to ask to build a trading plan, to build a trading system that you can operate off of. Now, what is that? Like I said, that's going to be on the 21st, Thursday night from 8 to 10 Eastern time here in the U.S. And this is the way you can sign up for it. It's very inexpensive, $97. It's at tradethesystem.com/yes, or you can either call the office that we've got 859-963-3445, and you can sign up for this, and you'll find out. We'll forward you the information about the webinar that we're going to do. And some of the things that we're going to cover in this webinar are this. We're going to be reading volume, how to identify trading opportunities, determine what the professional traders are doing it when they're reversing positions, ways to build positions. I'll show you all the things I showed you out of the webinar today. I'll show you where to go to get all that information, ways to build positions to reap big profits. Do you want to do it with options? Do you want to do it with futures? Do you want to do it with ETFs? Do you want to do it with stocks? Ways that you can take advantage of moves in the market, in the grain markets, or just the equity markets. Like I said, it's not just a grain thing. You need to know who you're trading against. How can you tell that? You can do it when you start reading tape. I'll cover part of the thing. It's probably be scheduled for 2 hours on the webinar. More than likely, the last one I did, it ended up being 3 hours. I love teaching. I love trying to impart some of the things that I've learned in 30 years of trading. I want to see people be successful. Does it take away from what I'm doing? No, it doesn't. It helps what I do because it makes me get more structured every time that I teach this. I get better. What's driving trade setups? You need to know it. And as these trade setups begin to develop, how you can do this, how to think like a computer. What are we trading against? A lot of the volume that we trade against, especially in the financial markets, are computers. And how are computers programmed? What are they using to make decisions, the computers? Well, people have to program computers. If you know what people are thinking, then you begin to be able to think a little bit like what areas of the market, what areas of technical type decisions are being made by a computer, and how can you identify it? Yes, you can. And also identify the best setups that are most likely to help you to develop confidence. And I will spend also trying to give you some information to help you hit, like I said, to make $50 a day. Is it ridiculous? No. If you could make $50 a day every day, what would that do to your account? Trading one contract. Now, if you can get good at trading $50, one contract and making $50, what do you have to do to make more money? In your trading platform, instead of buying one contract, you buy two. When you get really good, you move from 2 to 3 and from 3 to 4. Now, if you were trading 10 contracts and made $50 a day off of it, for some of you guys making $500 a day, that's what you would love to do. What if you're trading 20 contracts making $50 a day? You don't have to change a setup of making $50 a day. All you have to do is change a number and get more proficient at it. Get somebody asking the last webinar, well, what's your success rate? You said about 78, 79%, I think the comment was. What happens if you hit 78, 79% of your trades and making $50 a day? Now, do the math on it to whatever size account you've got and how many contracts you're trading, and you'll see what happens. Guys, I'm running out of time. I'll try to answer a few questions along the way. An easy commute is one of the benefits of trading. Just stumble down the hall and you're at the office. Absolutely, Jim, that's right. Do I trade live cattle? Absolutely. I would love to show you. Let me see if I can show that slide in the market right now. Ha, you're in luck. Look at this, guys. Come on up here. There we go. Look at this live cattle chart right here. October live cattle. Look at the move that this made. I started trading this when we got this first break. What gave me an idea of this? The first day I traded this, I made $1,400 off of it, trading a couple of contracts. And it was so easy. Why? Because the grains broke. When the grains broke, no, it wasn't a government report that did it. And look at the move that it made. Each 1 cent move, like from 146 to 147, it's a 40,000 pound contract of cattle, live cattle. Each one of these moves, $400. So look at the move that this thing has made in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about 10 to 12 trading days, from 160 to 146. That's a pretty big move. Look at the trend on the upside, and then look at the trend on the downside. There was a break coming in there that was real obvious, and I would love to show you. I don't know if I've got this on this particular one. Yes, I do. See this spread right here over here on the right hand screen? This is a spread, and for you guys who've got, if you use TradeStation, I'll teach you guys how to build spread trades, how to build spread charts off of this also. Now, what happens? Look at the move in here that this made from the end of July, the spread when we were trading below $1 and it went to $2.40. That's some type of move. Now this is August soybeans, and what happened? We saw this move in here. It went from July from 180 to below $1, and then from below $1 it went to 240. Why? The August beans were in demand. It didn't go away. They started following the November beans down, but it got to a point in here where there's still a demand market because there were no nearby soybeans, and the crushers were running out of soybeans. So they had to pay up for them. That's why we got this move from where it went from $1 back to $2.40. How big of a move is that? $7,000 move, over a $7,000 move from mid-July on a spread trade. Do any of you guys trade spreads? Yeah, this is showing September, on the one on the left, it's showing a wheat corn spread. The wheat's on the top, corn's on the bottom. Now what's potentially can happen, there can be a lot happening here. Guys, so I'll just go back. These are some things I would love to be able to spend some time with you guys and show you what I'm doing. It'd be a blast. And this is what we're going to be doing in these markets. We've got some potentially mega moves I think could potentially show up, and I've got to show you one other market. I've shown you the soybeans. There's some, and I'll just let me get over here quick before my time runs out. Here's corn. I don't want to be the guy who puts us behind. Look at corn right here. Daily chart on corn. Look at the trend of this thing. Look at the basing pattern that we've got. Now look at the volume in here. Something's going on. Do you know how to trade it? I'll show you how I've traded it. I'll show you how I've traded it for 30 years and potentially very little risk. I'm located in Tennessee. Hopefully controlled risk going in. Build you a position. I'll show you how to build positions. This may be a fantastic opportunity to go in there and buy options and trade this thing. So guys, that's you've got up there on the screen. TradeTheSystem.com/yes. It probably, just think about it. I told you it used to be an $80 round turn trade for one trade. You would spend another 2-3 hours in there, and we'll have this recorded. You could go back and look at it if you can't be there on the 21st, and $97. Guys, I hope it helped. I hope I whetted your appetite a little bit on these markets, and I'm finished with 13 seconds to go.